In today's video, we're going to discuss a better way to play the AI investing theme with Yieldmax. NVIDIA is one of the best ways to play the AI theme, but with NVIDIA's weakness recently, I have two other Yieldmax plays for you that could emerge as winners in the AI space if NVIDIA fails. Yieldmax helps me earn over $500,000 per year in dividends, as you can see below. And we're outperforming the markets with Yieldmax and margin. We're up 6% for the year. The rest of the indexes are flat or negative to start the year. So we're living financially free out of our brokerage accounts using Yieldmax and margin. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. We're also up 18,000 today, or 1.07%, but 18,000 doesn't matter, it's the percentage. 1.07%, if you look above, that also beat the Dow and the S&P. When you factor back in my margin, I also beat the NASDAQ. So this margin debt doesn't bother me because not only does it help me outperform the markets, but my dividends of over 500,000 will pay it back in around 1 year. I'm also not worried about my margin interest because I've negotiated down twice. Many of my clients who bought my e-guides did the same thing. Okay, so NVIDIA has been displaying some weakness lately as it has some issues around its AI development, okay? We have DeepSeek and now we have other AI plays that are emerging as potential competitors to NVIDIA and their growth plans. So I wanted to discuss those plays here today because yes, we made over $18,000 today and a lot of that was thanks to Yieldmax. But we also have these other AI plays by Yieldmax that are starting to show some real momentum as of late. First up, we have Alibaba, okay? And the way we're playing Alibaba is through Yieldmax's babo, B-A-B-O. And Alibaba is off the highs. It was at 120 earlier in the year, and on a 5-year chart you can see it was at 300. So there's a lot of value in BABA shares if you're a chartist, and if you think that China is going to eventually grow again in the future, then Alibaba is a great way to play that. But you don't want to put too much money in China, obviously, because China is very volatile. Also, Alibaba has high maintenance, okay? So Alibaba is 50% maintenance, as you can see here, and babo is also 50% maintenance. So this means with 50% maintenance that it sucks up 50% of your equity. If you need help understanding maintenance, that's in my Volume 3 e-guide. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a small amount of this over 1 million in purchasing power to get ahead. But you also have to keep a big enough cushion here with your equity so that you can withstand margin calls. Again, Alibaba and babo are both 50% maintenance, so they're sucking up half of my equity. That's very dangerous when you're trying to play with margin. Even if you're not using margin, you're just trying to live financially free out of your brokerage account using your E-Trade checking card, because I have an E-Trade checking card that I can swipe and go wherever I want within this world. I can buy cars, clothes, shoes, whatever I want with this E-Trade checking card, and it comes out of my margin debt, and then my dividends pay that back at the end of the month. So if you want to be able to withdraw freely out of your account to pay your bills, or swipe your checking card wherever you want to add to your margin, but then your dividends just pay that back, well, then you're going to have to keep high available withdrawals, so you have to watch your maintenance. So Alibaba is well off the highs. It's developing its own AI plans, okay? So go look into Alibaba and its AI plans, okay? I really don't want to get into that in this video because these videos are about the real world, and all we can really control is our position size, okay? So we have to watch our maintenance, we have to watch the charts and the price action, because the price action is the true judge and jury of what's happening. And we see Alibaba was up nice today. It was up 3 or 4% today. This is obviously after hours pricing, so you don't get to see the true gains from today, but they have their own AI plans. Go check that out. It's even better than DeepSeek, some people are saying. They're well off the highs. This is diversification away from NVIDIA's AI plans, just in case that becomes a cash trap, as some people are saying, because you can develop AI on other models that are much cheaper. Babo is a hedge against NVIDIA, and also Babo has a huge dividend, so these dividends are just going to cash flow our losses no matter what. I don't care if Babo is China related and it's risky. Again, we need a hedge against NVIDIA, and we get our dividend of about 50% per year in Babo, and that pays down our margin debt precipitously. That then accelerates our growth plans, because once my margin gets paid down, I always add more margin in with higher dividend paying names that keep growing my income, paying down my margin, and snowballing my growth. Next up, we have AI, okay? AIYY is the Yieldmax ticker symbol that we're using to track AI. And as you can see here, AI was up about 8% today. So it's moving big, bigger than NVIDIA, and it's off the highs, okay? AI was at 40 and right now it's at 33. So we're going with AIYY once again because it's the way to play AI with a dividend, because we don't want to just be in stocks with no dividends. Those don't qualify to banks for loans. What if we have a bear market where the stock is getting decimated and we can't even pay our bills during that bear market? AI was down huge during 2022, so you don't want to get caught holding the bag with AI. You'd rather be holding AIYY, because at least you're getting paid a dividend to pay you while the stock reemerges from its downtrend. But while you're waiting, you get to collect the dividend in AIYY, pay down your margin, and pay your bills in the process. AIYY is also 100% maintenance, so please be aware that sucks up 100% of your equity, okay? That's very dangerous to have when you're running margin. So AIYY, once again, it can be a widowmaker. Don't put too much in AIYY. You saw what AI did during the 2022 bear market. So you got to always manage your position size, especially with high maintenance names like Yieldmax, and AIYY is 100% maintenance. Of course, we have to watch our position sizes in babo and AIYY. I put a small amount in those, and then I concentrate most of my money in the indexes, as you know, because Cornerstone has a 20% dividend, and it drips those 20% dividends down to the NAV for 29% gains every month. So we get a 20% dividend with Cornerstone every year, and then we drip those dividends down at the NAV again for 29% gains every month. Cornerstone is a 4-star fund, so I don't want to hear anything from the detractors when it comes to its decay on its chart. As you can see on the Morningstar chart, it moves upward, left to right, okay, on a 10-year chart there. But on E-Trade's chart, yes, you can see on a 1-year chart, it moves perfectly. It moves upward, left to right, and it actually outperformed the indexes last year. But on a 10-year chart, it moves sideways, okay? But that's because you have to factor back in dividends and drips. Similar with Defiance, okay? It moves sideways to down on a long-term time frame. With Cornerstone, you have to factor back in dividends, drips, and rights offerings, okay? Many closed-end funds have rights offerings. Cornerstone is no different. The rights offerings are how we really level up our account. If you need help playing Cornerstone, that's in my Volume 4 e-guide. And when you buy my e-guides, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. So you never have to worry about missing the Cornerstone rights offering announcement here in Discord. We have over 1,000 members here in the Discord chat room pursuing the FIRE lifestyle. So if you ever have any questions about your brokerage account that I can't answer, someone in there most likely can answer for you. We have a ton of very savvy, affluent investors in that Discord chat room, many of whom have much bigger accounts than me, okay? So we're all learning from each other in that Discord chat room. It's one of the best features of my YouTube channel. Don't forget, when we're running this margin, that we always keep put options on just in case the market were to have a crash. So we can withstand over 20% corrections at all times in our account thanks to our high available withdrawal and our low maintenance names. But should we have a crash of over 20% in a given night, then our put options will make us more money than we potentially lost in that event, because our put options will be up thousands of percent in that kind of event. If you need help hedging your portfolio with put options like I do, that's in my Volume 5 e-guide. And if you need help selling put options like I do to lower your risk, lower your margin, and lower your volatility, that's in my Volume 6 e-guide. All right, so we're outperforming all of the indexes with Yieldmax and margin, and you can do this too. Anyone can do this. It's just a matter of using margin properly. If you need help using margin and living financially free out of your brokerage account, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, Discord access is free for life, and my phone number is free for life, so keep that in mind. All right, and if you like this video, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.